Good evening, everyone. Thank you for being here. Today, I will be speaking about a topic that is increasingly important in our digital economy: why privacy by design is important for the success of fintech. As financial technology or fintech transforms how we interact with money, privacy is no longer just a legal checkbox. It's a competitive advantage and trust building mechanism. In this presentation, I will explain what privacy by design or PBD is, why it matters so much in fintech, and how businesses can apply it effectively. To begin with, let's understand the foundation. Fintech is driving innovation in areas like online payments, peer to peer lending, robo advisors, cryptocurrency platforms, and decentralized finance, that is also known as DeFi. All of these platforms rely on large volumes of sensitive data to operate: personal identities, bank account numbers, credit histories, behavioral patterns, and even biometric data. With that level of data dependency, privacy risks are naturally amplified. This is where privacy by design comes in. Developed by Dr. N. Kevorkian in the 1990s, PBD means embedding privacy features directly into the architecture of digital systems. It's about being proactive rather than reactive, designing with privacy in mind from the start, not patching it on later. PBD is based on seven core principles such as full life cycle protection, visibility and transparency, and respect for user privacy. These principles become especially valuable in fintech, where speed and scale must go hand in hand with security and trust. Now let's talk about the global regulatory push driving this change. Over the past decade, data privacy laws have become more stringent. The General Data Protection Regulation (GDPR) in Europe is the gold standard. It requires companies to demonstrate that privacy is considered in the design of their products. Then we have CCPA in California, PDPA in Singapore, and similar laws across India, Brazil, and other countries. These regulations don't just recommend privacy by design, they enforce it. Fines for non-compliance can reach tens of millions of dollars. For example, British Airways and Marriott were fined heavily under GDPR for failing to protect consumer data. But it's not just about legal risk, consumer expectations are changing. According to Cisco's 2023 report, over 80% of users are more loyal to companies that show strong privacy practices. So, PBD also becomes a marketing and trust building tool. Let's now explore how privacy by design can be implemented in real fintech scenarios. As fintech integrates AI, blockchain, and open banking, the complexity of data sharing increases. This opens the door to both opportunity and risk. For example, in AI powered lending platforms, bias and data misuse can occur without transparent algorithms. PBD helps here by enforcing explainability and accountability in automated decisions. In blockchain based finance, zero knowledge proofs allow for transaction verification without revealing identities. This is a perfect example of privacy enhancing technology aligning with PBD principles. Some fintech apps also use consent dashboards to give users control over which data they share and with whom. When privacy is integrated early in development, it becomes a seamless part of user experience rather than an annoying afterthought. Of course, implementing PBD is not without its challenges. Many fintech firms operate on legacy systems that were not designed for modern privacy expectations. Migrating this to new, privacy first architectures is expensive and time consuming. There's also a shortage of privacy engineers who can balance technical design with legal and ethical considerations. Plus, the ecosystem is often fragmented. Third party rules may not align with your privacy standards. To give you a real world case, Robinhood faced backlash and fines due to unclear data practices and misleading data sharing items. Similarly, Plaid, which connects apps like Venmo and Coinbase to user bank accounts, had to settle a major lawsuit for collecting data without adequate consent. These cases shows that poor privacy practices can damage even well-known brands. As we look ahead, user trust will become even more central to the fintech value proposition. People are becoming more privacy aware. They demand transparency and control over their digital identities. This is why modern platforms are offering real time privacy settings, allowing users to toggle data sharing permission instantly. PBD also assigns with trends like quantum resistant encryption, decentralized identity wallets, and privacy preserving AI, all of which are shaping the next generation of secure finance. More than ever, privacy needs to be built into the UX, user experience. A fintech app with simple, respectful, and clear privacy options is more likely to retain users long term. In short, privacy design is no longer a tech issue, it's a business issue. So, to conclude, privacy by design is more than a regulatory requirement. It's a strategic advantage that builds customer trust, ensures legal compliance, and supports innovation in fintech. Firms that prioritize privacy are not only more secure, they are more sustainable. They earn their users' trust and stand out in a crowded market. And as technology continues to evolve, PBD will become even more critical. Whether it's AI or DeFi or open banking, privacy must be part of the foundation. I encourage all fintech innovators, developers, and investors to view privacy not as a cost but as a value added feature, one that can define the future of finance itself. Thank you for your time and attention. I hope this presentation helped you understand the critical role of privacy by design in shaping a secure and successful future for fintech. Thank you.